Hello everyone, this is Singh, broker owner with Supermax Realty. Welcome to my real estate channel, Real Estate Edge with Singh. So today is January the 29th and everybody is eagerly waiting for Bank of Canada's rate cut announcement, which will impact mortgage rates for variable mortgage rate holders all across Canada. So some of my clients have reached out to me in past few days, texting or inquiring me what I think would happen today, 25 basis point rate cut, 50 basis point or pause. In this video, I'm not going to hold you hostage to watch all my video. So if that is all you want to hear, I personally feel today is going to be 25 basis point rate cut. But should we start celebrating, as a realtor or mortgage brokers? I personally feel we should start thinking about rest of 2025, how real estate market will pan out in Ontario. Folks, I've been selling real estate for 19 years full time. I have seen highs, lows, good times, bad times, recessions. I can tell you one thing, I haven't seen market conditions like these in 19 years. These are the worst conditions. So if you stick around to watch whole of my video, I will explain, what I'm seeing in the market through, data which is readily available on Google, newspapers. You can verify and make decisions this year of buying or selling based on all these information so you can make informed decisions. Personally, I feel there's a perfect storm brewing that will hit Canadian real estate market in 2025, and these are certain of the data which I want to share with you. So recently, Building and Land Development Association came out with their data that new home sales have hit record lows and they are 35-year lows. If you go on the weekend to any new builder site, whether it's GTA, Kitchener, Brampton, Mississauga, London, Windsor, you will see many of the model homes, they are empty. There's nobody there, right? Second, we have right now less influx of immigrants, non-permanent residents, students coming to Canada, which is projecting less demand. Unemployment rate in Toronto is hovering around 9% and is trending up. A lot of the landlords in GTA, they have hard time finding tenants, and I see many condos or houses on the market for many months. Now they're reducing prices. According to Stat Canada, they are saying a lot of youth who pass college universities between the ages of 24 to 26 or even younger than that, they have hard time finding jobs, and their unemployment rate is hovering at between 11 to 13% in certain cities across Canada. There was a recent news that 1 in 10 people in Toronto, they rely on food bank, meaning 3.49 million people visited food banks in Toronto and surrounding areas last year, which is a 41-year high and 32% higher as compared to the previous year visits to the food bank. Another point which is very important is we have too much household debts and too less income to support the current asset prices, meaning people have so much debt they can't buy a house at today's valuations. And there was a recent report from one of the leading banks. They said if we combine mortgage and home equity line of credits, we are sitting close to $2 trillion in debt in Canada. Line of credit debt is 58 billion, auto loans 81 billion, and if you see total debt to GDP in Canada, we have one of the highest. It is 357%, and it is nearing $10 trillion. In December stats, as per Toronto Real Estate Associations, we have close to 3,359 sales. 3,359 sales all across GTA. GTA is a pretty big area from Barrie all the way to Durham, Burlington area, and all the way to Cambridge. So the sales were only 3,359, and listings for rent, listing for sale are 166 and 121. So basically we have 90,000 agents who work in GTA, and we have close to 3,300 sales last month. So you can figure it out how many average sales per agent. And in last 2 years, we have tons of purpose-built rental buildings which are already finished, and a lot of them will be finishing in next 12 to 24 months, and they will bring lot of supply on the market for rentals, and rents are keep continuing to decrease because of multitude of reasons, including immigration, and less people are migrating or moving where they're living to a bigger apartment right now. Another noticeable point is 50% mortgages in Canada will be renewing in 2025, 2026, and unfortunately, if any household income decline or some person lost a job, so by renewal, they won't renew the mortgage. They will probably end up selling the house. It might be a forced sale or panic or desperate sale. So that is another, very, very critical, concern I have as a real estate broker is 50% people will be renewing their mortgages in 2025 and in 2026, which accounts for close to 1 million mortgage renewals this year. And if obviously we see the job markets, since there's a lot of pressures, recession there in Canada, home prices keep falling, because if people are unemployed, they are not going to buy $1 million house. And recent articles in the newspapers saying lot of big Canadian companies, they are filing for bankruptcies, they are closing out. Lot of institutes are closing their campuses. And there was a recent article in London newspaper last week that one of the companies was supposed to open a big, manufacturing, unit in London. They bought the land and they were supposed to open manufacturing. And because of the tariff fear from US, they, shut down their plant and cancel and put their land up for sale again. Condo market in GTA is really bad situation. Some parts we have close to 7 months supply on the market, and people who bought in 2019, 2020, 2021 on the peak prices when the builders were selling close to $1,100 to $1,500 square feet. Now they are in jam because right now the market can only bear $800 to $850 per square. So there's big losses for the investors. So even if you pay the mortgage on the asset which has come down in prices, and if you are not willing to hold for next 5 to 7 years for the market to bounce back, unfortunately you have to sell that asset at loss. So those are also very challenging times. And recent report I read last week, Oxford Economics, they said Canada housing need projected to decline by 500,000 houses by 2035. You can Google and read more details. So the biggest elephant right now, or the uncertainty, is tariffs. So if we have tariffs from US hitting Canadian economy, and Trump promised by 1st of February, Canada will be hit by 25% tariff, which will be a 6% hit on our GDP as per top economist. And one of the economists video I watched, they said during recessions, GDP typically decline 2 to 3%. And obviously, if we have 6% hit on our GDP, that will be devastating for our economy. And US goods which we are importing, will go up 25%. Our Canadian dollar versus US will weaken and probably hit 62 cents. And if our politicians decide to put counter tariffs, which is again inflationary, Bank of Canada will have to increase the rates. There was a recent report by, I think, Scotia Bank. They said if we end up, increasing the rate, then, again, that is a problem for a lot of house owners. So a lot of volatility. And what I'm noticing meeting people in the community is, for many, they bought too big of an asset versus their income, and incomes won't be able to keep up with the rising prices, grocery prices, oil prices, carbon tax in their, utility bills, resulting in people have to have less money to spend. And again, these will create job losses, rise inflation, and this toxic cycle will continue. Folks, as a Canadian, sometimes I feel kind of frustrated with the current situation, as right now we don't have a functional government. Everybody is looking for themselves, the policy makers, and nobody is there for us to fight the tariffs. And this uncertainty will loom till November 2025. So a lot of people were thinking maybe we have elections summer, maybe we will move on and have more clarity. My gut feeling says, we're gonna keep dragging this thing till the end of year, and it's gonna be long summer for a lot of families. So if you're a seller, who tried to sell last year and somebody gave you advice, next year market is gonna go to the moon, friends, you might be in a shock if you're waiting for spring to list your house, because I doubt prices will rise, and unfortunately many won't survive in this high rate environment, because once the renewal comes, their mortgage payment is going to be doubled, and unfortunately if one of the family members lost their job, they might not be able to afford it. So always take advice from a knowledgeable agent who has the guts to tell you the truth. Last summer, I remember one couple, they called me for home evaluation. I give them a number which they don't like, and they end up listing their house with another agent who obviously bought their listing by giving them a higher price, and wasted 5 months, and probably they're gonna list in spring, one of their friends told me, and they might list with me again, but now they're gonna net at least 60 to 50,000 less as compared to last summer. So waiting won't help you. If you, obviously I don't have a crystal ball, I'm not an economist by any stretch, but if I see all these factors, I don't see any tailwinds or any positive sentiment that will take our house prices in spring. So if you are in a market to buy or sell, and you want a professional experienced broker, give our team Supermax a call. You can reach me directly at 647-961-2639. Thanks for watching. Have a wonderful day.